Hey there, everyone. Today, we're diving into a topic that has massive implications for the global economy, and it all starts with a conflict in the Middle East. Now, this might not seem like an unusual occurrence, but the impact it's having on the UK's economy is something that's caught the attention of analysts and experts alike. So, let's break it down. The Organization for Economic Cooperation and Development, OECD, has released a report that paints a pretty concerning picture for the UK's economic future. According to their analysis, the UK's economy is set to take a bigger hit than any other industrialized nation due to the ongoing conflict in the Middle East. And the reason for this? Well, it all boils down to the UK's heavy reliance on international trade and fuel imports. You see, the OECD has noted a significant weakening in the UK's job market and a contraction in business investment, which they attribute to a lack of momentum going into 2026. And with the US-Israel attacks on Iran causing a spike in oil and gas prices, the UK is feeling the pinch. Personally, I think it's a real eye-opener to see how interconnected our world is. A conflict halfway across the globe can have such a profound impact on a country's economy, and it just goes to show how vulnerable we can be when it comes to global events. Now, let's take a closer look at the numbers. The OECD predicts that the UK's economic growth will slow down to just 0.7% this year, compared to their previous forecast of 1.2% for 2026. That's a significant drop, and it's all because of the rising inflation and the shock to the energy markets. In contrast, countries like France, Germany, and Italy are expected to suffer a more modest hit to their growth, with only a 0.2% reduction. So, why is the UK taking the brunt of it? Well, it's because these countries are more insulated from the spiraling energy prices, thanks to their diverse energy sources and stronger domestic markets. What makes this really interesting is the fact that the OECD is highlighting the UK's dependence on international trade. It's a reminder that we live in a globalized world, and our economies are intertwined in ways we might not always realize. But here's the thing, the OECD is also saying that the global economy as a whole will remain resilient, at least for now. They predict an average global growth of 2.9% this year, which is still on track with their previous outlook. So, it's not all doom and gloom. However, the uncertainty surrounding the outcome of the war in the Middle East is a huge concern. If the conflict persists and energy prices continue to rise, it could have a devastating impact on the global economy. And that's not even considering the potential repercussions of lower than expected returns from artificial intelligence investments. In my opinion, this is a real wake-up call for countries to diversify their economies and reduce their reliance on a few key sectors. It's a reminder that we need to be prepared for unexpected shocks and have strategies in place to mitigate their impact. So, what's the UK's plan? Well, the Chancellor, Rachel Reeves, has acknowledged the impact of the war and has outlined some steps to build a stronger and more secure economy. The government's strategy includes handing more powers to regional mayors, embracing AI and innovation, and establishing a closer relationship with the EU. It's a multi-pronged approach, and it'll be interesting to see how effective these measures are in the long run. After all, economic resilience is a complex issue, and there are no easy solutions. In conclusion, the conflict in the Middle East has shone a light on the vulnerabilities of the global economy, and the UK, in particular. It's a reminder that we live in an interconnected world, and our actions and decisions can have far-reaching consequences. So, what do you think? How do you see this situation playing out? I'd love to hear your thoughts and opinions in the comments below. Until next time, stay curious and keep exploring these fascinating topics with me.